You're watching Mirror 7 News. Stay informed, stay ahead for more news.
A new development has been unfolding in the world of corporate deals, and it involves some very familiar names. Paramount Group, Inc., which is traded on the New York Stock Exchange under the symbol PGRE, is now under investigation by the investor rights law firm Halper Sadeh, LLC. The issue centers on Paramount's planned sale to Rhythm Capital Corp. for $6.60 per share. While at first glance this might look like just another business transaction, shareholder rights are being closely examined, and questions are being raised about whether this deal truly serves the best interests of investors. The law firm is exploring whether Paramount's board and executives may have breached their fiduciary duties to shareholders. In simple terms, fiduciary duty means that company leaders must always act in the best financial interests of the shareholders who own the company. If a sale price is considered too low, or if important information was not fully disclosed, shareholders could end up shortchanged. That's why law firms like Halper Sadeh step in. They work to ensure that investors are not left with less than they deserved. But Paramount is not the only company under the microscope. The same investigation is covering several other businesses that are also going through major transactions. Wide Open West, Inc. has agreed to be sold to affiliates of Digital Bridge Investments and Crestview Partners for $5.20 per share. Tourmaline Bio, Inc. is in the process of being acquired by Novartis AG for $48 per share in cash. And BT Brands, Inc. has a proposed merger with Aero Velocity Inc., where BT Brands shareholders would own roughly 11% of the combined company once the deal is closed. In each of these cases, Halper Sadeh is reviewing whether the deals were structured fairly and whether the terms were fully transparent. The firm has a history of challenging deals that appear undervalued or that may not have been negotiated in the best possible way for shareholders. The firm also makes it clear that it may push for increased financial consideration, better disclosures, or other remedies if it determines that shareholders are being treated unfairly. For investors, the message is straightforward. They have rights, and they don't have to passively accept whatever is decided by corporate boards. Shareholders are encouraged to reach out to Halper Sadeh, free of charge, to discuss their options. The firm emphasizes that its work is handled on a contingency basis, meaning shareholders do not pay legal fees out of pocket. This type of investigation reflects a broader pattern in the financial markets, where investor rights firms play an important role in keeping corporate actions in check. While deals and mergers are a common part of business life, transparency and fairness remain critical. Paramount Group's sale, like the others under review, will be closely watched to see if shareholders truly get a deal that matches the value of their investment. Stay subscribed for more videos.